But meanwhile, Varsha staying on with us because Waaree Energies is in focus after its energy storage arm raised 1,000 crores for a lithium ion and battery pack plant. Before we're speaking to the company on what their blueprint for expansion looks like, Varsha staying on with us to talk about this move and what it means for the company.
Well, its subsidiary company, that is Waaree Energy Storage Solutions, have actually raised almost 1,000 crores of funds, now which is from family offices, HNIs and institutional investors, and this will support the capex plan of around 10,000 crore for a 20 gigawatt hours lithium ion cell and battery plant. Now this the company has an aim to become fully integrated energy transition company. Onto the order book which stand at around 47,000 crore and has 100 plus gigawatt of order pipeline for overall Waaree Energies. Talking about the expansion roadmap that the company has, the module capacity is expected to reach to 26.7 gigawatt by FY27 with cell capacity of 10 gigawatt, and if you see ingot and wafer capacity, which is nothing but a backward integration that the company is going into, is expected to reach 10 gigawatt each plant. Talking about the battery energy storage push, 20 gigawatt hour lithium ion cell and battery pack has been planned, and the phase 1 will come online by FY27 and the balance capacity will come by FY28, and they target grid scale EVs and hybrid renewable project. Onto the guidance and outlook, FY26 EBITDA guidance has been expected around 5,500 to 6,000 crore, and they are expecting strong H2 FY26 expected with higher cell utilization.
Okay, Abhishek Parekh, Group Head Finance, Waaree Group, joining in for more on this. Abhishek, very good morning and thank you for your time to us here at NDTV Profit. We always appreciate our conversations. Just want to talk about this fundraise that the subsidiary has done of about 1,000 crores. It's, of course, within a larger capex plan of 10,000 crores. How does this fit in? Do you need to raise more funds? And what is the end-use purpose or the end-use plans of this lithium-ion strategic outlay?
Good morning, and thank you so much for having me on the show. So our subsidiary, Waaree Energy Storage Solution Private Limited, which is the battery arm of Waaree Group, has raised 1,000 crore plus from clutch of investors. The objective here is to set up a 20 gigawatt worth of lithium-ion cell and pack manufacturing plant over next 2 years of time. So we are having this project in two phases. First phase is around 3.5 gigawatt worth of lithium-ion cell plus battery pack manufacturing plant expected to commercialize in next financial year, FY27. Another 16.5 gigawatt worth of cell plus pack manufacturing is expected to commercialize in FY28. So over next 24 months of time, we expect the utilization of the money. The total cost of project here is up to 10,000 odd crore worth of money to be spent over 24 months of time. The 1,000 crore raised from the investor set is validation of Waaree's commitment towards green energy transition. We have already picked up more than 600 crore of initial equity in this company we have put in from the holding company. We have also committed another 300 crore worth of equity from the holding company for this project before raising capital from the investors. So all said and done, today we have around 1,900 crore worth of equity commitment, 1,000 from investors and 900 crore from the holding company for this project, which takes care of around 20% worth of overall project cost. So since the project is happening in two phases, we also have debt planning in this company, wherein we will raise the balance of capital from debt for the completion of the project.
Okay, I'm just trying to understand how accretive on your balance sheet this ends up being, Abhishek.
So capital allocation policy for Waaree Group is very clear and very transparent, I would say. Our ROCs and ROEs have been to the upside of 20% plus historically, and we have been maintaining this range of ROCs and ROE. So our board is always committed to stay and ensure that we are committing the same numbers to the investors in the past. We should continue the same. So we maintain the same set of numbers and return ratios from the upcoming projects as well. Whatever we set up, be it module manufacturing, backward integration, our return ratios have always been in the same range.
Fair enough. Abhishek, morning. Alex here. I'm just wondering about, so you've spoken about the capacity and the trajectory and how that's going to be set up. But you didn't mention, is this going to be primarily to EVs? What is the product going to be sold to? And then I have a follow-up on that.
So our focus is very clear to start from the utility scale grid adaptable battery pack, so which will ensure the storage of power at the project site, primarily the solar site, FDRE sites, RTC site, which ensure 24/7 renewable energy. So that is the main product. But we also have fungibility even to move on to other product line, which also includes towards electronic vehicle manufacturing batteries. So battery which can actually be used for mobility as well. We should be having an fungibility towards that as well.
Initial plan is going to be BESS basically, and so therefore the question is, are you already in talks with some of the potential clients? What confidence do you have? Because the space, I think a lot of people are getting into this space, Abhishek. What I'm trying to get is that if there is so much capacity that is being created, is that going to be lapped up very quickly? Are you already in talks? What visibility do you have?
In fact, over the last few months, we have started bidding on projects for BESS. We have also announced few projects wherein your company has got orders for BESS as well. Our existing customers who are buying solar panels, who are buying EPC services from us, are the same set of customers you can expect to continue to buy BESS as well. Since the project has got 24 months of time, our objective is to keep booking the order book while we start the commercial operation of the projects. Not just in India, in fact, overseas as well, the demand for battery energy storage systems is going to the roofs. We really want this plant to be online and commercialized as soon as possible.
I'm going to actually double down on the question that Alex asked. There seems to be more and more people getting into that game. How do you see that competitive landscape play out? Do you think now it will impact pricing? Do you think that there's going to be some strain there?
So what is more important here is not the capacity build-up or not the new capacity which are coming up at the pack level. What is more important to understand here is how much backward integrated the capacities which are coming up are going to be. For example, if battery energy storage pack manufacturing you talk about, that's a manufacturing process, but the capital required in those projects is very meager. While what we are talking about at Waaree is the full end backward integration up to cell manufacturing as well, which is highly technical in nature as well as very capital intensive. In fact, the current capital committed 10,000 crore, more than 80-90% of the capital is going to be for the backward integration, which is lithium ion cell manufacturing. And a smaller portion of capital will be going towards the pack manufacturing. So majority of capacity announced in markets are not integrated. That's a differentiation that we are getting to the market. And which is why the customers are more confident to work with Waaree, because our supply chain from day one will ensure transparent and upstream supply chain with the traceability up to the cell manufacturing.
Abhishek, good morning. Hiral this side. Now, with everything said and done, there are a couple of concerns that a lot of analysts are pointing out when you talk about the renewable energy space, where additions are expected to slow down in FY27, possibility that the government could pull back incentives as well, and the grid constraints also limit execution. Now, if all of this is something that you're looking at, is this already factored in the kind of trajectory that you're talking about right now?
But whenever we make our financial internal working for the projects that we are bidding for, one thing that we always ensure is to build the order book first before we start the construction of the facilities. And I think we are going to continue the same here as well. In past also, before setting up capacity, we were fully loaded with the order book. In battery manufacturing as well, our plan is to do the same and replicate the same with support from our existing customers in India as well as overseas. So you can expect the order book building consistently towards the rear end of the commercialization of the project of BESS.
Okay.
As long as your capacities are booked with orders, there's no such worry about the demand and about the capacities and supplies which are coming up in markets.
Okay. So tell me one thing now. The manufacturing capacity has been overshooting the demand, and this oversupply has actually resulted in correction when you talk about module and cell prices as well. what is that number that you're baking in when you talk about the pricing aspect and that indirect impact that could be coming in on the margins as well, Abhishek?
Since the pricing in the market are based on the reverse bidding mechanism, you expect the price to be competitive going ahead as well, right? So we have to be competitive enough to ensure that we are able to deliver to our customers on time and in the expected pricing required by the customers.